Hello, everyone. Thank you for joining me for a look at the week ahead for the 15th to 19th of February 2021. I'm your host, Steve Reisner. A little bit of background about myself. I'm an ex-U.S. Air Force fighter pilot with master's degrees in both computers and business, an active trader since 1998, full-time since 2009. I am a technical trader, but I do use some limited fundamentals, and we'll talk about that when we go through the stocks. I moderate for H&R Candlesticks, hit and run from time to time, and I do provide one-on-one mentoring. I want you to stick around till the end of the presentation. We have some special offers for you. What are we going to talk about today? We're going to go over the lesson of the week. Using stochastics RSI to improve your results. Just a little small presentation there. Economic calendar. I think I'm able to find it in the earnings calendar. Market overview, trade ideas, and special offers. Okay. Stochastic RSI. Some rules of thumb. I develop and backtest a set of parameters that fit your trading style, because you have to kind of get used to them. They're not, to me, they're not just an on-off switch. Trading is an art that has some science and mathematics involved in it, but it's primarily an art how you interpret them. I use the parameters of 7733, simple moving averages, and they work fine for me. Things like toss, you only, I think, have three. You have a 773. But anyway, play around with the numbers that look best for you. Smaller values will increase the number of signals, but they will also increase the number of false signals. So 7733 for me is a compromise between fast enough and too slow. Now, a signal occurs when the %K and %D lines cross, and I'll go over the picture in just a minute. And we need to keep in mind that not all crossovers should be given an equal weight. You have to take it in context with the pattern of price. All right. I combined stochastic RSI with the price action. I used my favorite Japanese candlesticks or Western patterns, and I use them only, and I emphasize the word only, to confirm price and patterns. So price is king. And what I was talking about, the crossover at the top and a crossover at the bottom, you know, those are the most ideal. But you get some crossovers here in the intermediate stages, they don't mean necessarily as much. All right. Combining with my favorite pattern, the J-hook, or pullback opportunity, it's basically a move up, a pullback, and in this case, it's followed by a bullish engulf move higher with stochastics RSI curling up from the bottom. This is a high probability setup. And what I now do is I've got a candlestick pattern set up with a crunch down onto the 8 exponential moving average. Got no lower than the 17. Then it starts to have a bullish candle, and the stochastics RSI is pulling upwards. All right. My favorite patterns that I use are a hammer or a shooting star. I use the morning star and evening star, and a doji and a gap, whether it be up or down. Primarily looking at a reversal of the trend or a continuation move. There are some consolidation patterns or continuation moves like 1, 2, 3 pattern, and bullish and bearish engulf. Now you can Google on my YouTube site, and you will find my 1 hour plus presentation on my favorite patterns if you want to get into deeper about that. There are some key points and pitfalls. The most powerful times to use the stochastics RSI cross up or down is at or near support resistance levels. The midpoint crossovers I found to be extremely powerful when they work, but they can give some false signals, a kind of a wobble, maybe a halfway up or a halfway down. It could work and it could not work. You'll have to play it around with it for a while to, determine what all the rest of the parameters are that make it good or not so good. Now, the strongest and weakest stocks in the market could have their stochastics RSI pegged either at the top or at the bottom. So just because it's at the top doesn't mean that it's time to sell, or that it's the bottom, it's time to buy. You need the corresponding candlestick pattern and price movement and confirmation. This just gives us yet one more set of confirmation that it will have a higher probability of success. I do not use it stochastics RSI as my sole criteria for a trade. In fact, it's really secondary or tertiary. And be aware of divergence with price. If you see stochastics RSI crossing, but the price is going the opposite direction of what the crossover is telling you, be careful. This could be an early sign of direction change. All right, if you want to find out a little bit more about stochastics RSI and how to use it, there are two links here. One from tradingview.com that I found nice, and tradingsim.com on how to create the stochastics RSI and comparing it with the regular RSI. All right, let's go ahead and look at the week ahead for the 15th to the 19th. 15th is a holiday, so the markets are closed. We have Empire State Manufacturing Index at 8:30 on Tuesday before the open, and nothing the rest of the day that I see to worry me at all. We do have some economic news at 8:30 on Wednesday before the bell, PPI and retail sales. Those will be fairly important. Industrial production at 9:15. Then the markets open. And after the markets open at 10 o'clock, we have business inventories and housing market index. One that could be a player here is the FOMC minutes at 2 p.m. I don't really see that as a major market mover unless there's some surprise in there, which I doubt that there will be. Let's go on to Thursday. Before the bell, we have housing starts, jobless claims, Philly Fed, import-export prices, all at 8:30. Nat gas at 10:30, whoop-de-doo. I really don't care anymore. And petroleum now has moved from Wednesday over to 11 o'clock on Thursday. All right, on Friday, none before the bell, but the PMI composite flashes 15 minutes after the open. I really don't like the timing on that one, but okay. And existing home sales at 10. And be advised that the monthly options expiration is on Friday. All right, here are Earnings Whisper's most anticipated earnings for the week of the 15th. Obviously nothing before the open on Monday and a few things after the close, even though it's a market holiday. If you want to get the entire calendar, use this link and it will tell you everything that's out there that it's reporting earnings this week. I use FinViz every week to look at stocks that are reporting earnings, and I did it on Saturday, so therefore it looks at next week, not this week. Average volume over 500,000 and float short over 10, and I want the price of the stock to be over 5 because I'd like for it to be optionable if at all possible. Okay, so we have 26 of them here, and yeah, there are some of them, and I sort them by when the reporting date is, and then lump them together. The after the bell on the 16th and before the bell on the 17th are lumped together to try to watch. And we've got a few that are in the 20s, almost 30%. We've got a 40%er here for SKT, and I have a list. Okay, let's do a little bit of a market overview. The hottest sectors right now are the home builders, XLC, I think, which is communications, XLE, energy, XLI, industrials, XLK, technology, and XLRE is real estate. Let's go on over to our market. Okay, here we go. I want to look at the 4-week new high, new low ratio. That usually gives me an idea whether we're way overbought or way oversold, where we are. A couple weeks ago, we dropped into the bounce zone, and it was a pretty sharp reversal back up to the upside. And we've been hanging into the 85 to 95% level for a little bit of time now. All right, let's look at the markets. Let me get rid of that. I'm going to start with oil. Oops. Yeah, get rid of that. There we go. Okay, oil's up there at the $58 level. I think it was on a 9-month or a yearly thing. Let's go to the time frame. Let's go to 1 year daily. Oh, it's even further back than that. Wow. Okay, it was just $58 was back back a lot further, but basically I've drawn it 51.5 and 58, and let's just zoom in here to our 3-month. And oil's taken off again. It basically paused right at that level, just like we paused at 51.5 on the move back up. Did a sharp move, then it paused, and looks like it may be in the next move up. Let me see if time frame. Let's look at the weekly, and let's look at 3 years. Okay, could we be heading back up to the 60, 63, 66 levels? Yeah, it's quite possible. My next real level of about 64, 65. Okay, so that's kind of what we're looking at for oil. It's getting healthier again. Gold just really, there's not going to be any inflation. The governments can't allow interest rates to go crazy. We may have inflation that pops up at some point along the way, but right now there is no fear in the Mudville of inflation. All right, let's go look at the S&P. I think if I look at the 6 months, I'll get a nope. We're on all-time highs, and we did a move up. We did a move sideways where I thought we could possibly pull back. Friday was a big up day, and stochastics RSI is at the top, but we haven't done a rollover yet. We're just up in this area here, so go with the flow. The trend is your friend until it's not. Dow looks basically the same as the S&P. NASDAQ, strong as can be, stronger than moose breath. And actually, Russell kind of led us out of all this. Small caps. However, it's kind of lagging the other indices here, the other three. So, it's kind of doing a pause, pullback. Less buying. VIX, again, shows no fear. Right here down below 20. And let's see. Let's go on over to some longs and some shorts. I'm going to use TC2000 to look at that. Let's go over I believe, all right, before we go into the trade ideas, I want to pat myself on the back here a little bit and actually tout what we are doing for our trade ideas. The trade ideas from the 7th of February, last week, the batting average stayed pretty high, 82% and 100%, the longs and shorts. The results from 7th February were not as good as the prior 2 weeks, but still 6% in a week and 2% overall to the short side is not anything to shake a stick at. But I did predict that, after the prior 2 weeks being so strong, that we might have a less strong week. Let's go back and look at 31 and 24 Jan. 11 out of 11 that triggered on 31 Jan longs. 2 out of 4 that triggered on the short side. We basically broke even there and made 17.5% in a week on the longs on 31 Jan. At 24 Jan, we only got 8 out of 12, and there are 14.5%. But we had some pretty good winners in here. But we had a few little bitty losers and one big loser in a run if we let it go the whole amount. On the shorts, we were 8 of 8, 100% way back there a couple of weeks ago, but they weren't all that profitable. They were 4% overall. But in a bullish market, that we've been in the last 2 to 3 weeks, that's not bad. Not bad at all. All right, let's go over the trade ideas for the 14th of February. I want to caution everybody, check earnings before trading any of these. All right? So let's go look at TC2000. ALDX. You could jump in early here if it opens positive on Tuesday, or you could wait till a move above, say, the $13 level for a move up to about, 14.5 to 14 3/4, and then see where it goes. It's basically pausing at this $14 level, which was the prior swing high. So now to move back up to there, it was not surprising that we actually pulled back from there. We're building strength, building cause to set newer, higher highs possibly. AMC Networks. I would make it at least move higher than Friday's high. And you may want to even move it up to about $53. And then my first target would be $64 and almost $65. So you could just as easily move that up here and see that it's actually going to break up and retest those highs. Now again, short covering rally, so be careful. ARLP, Alliance Basic Materials. This is coal. I'm surprised to see that, but a move in this would be my buy area here. There's about 6 1/4 or so area. There's a lot of room to the upside. I think a move to 10 could be in the cards. Probably not in a straight line, but a zigzag up there, it could over the next couple of weeks be pretty reasonable. BCRX, I do have it. Earnings on the 23rd. It did not list whether it was before the open or not. I'm going to assume, since it's been reporting before the open in prior quarters, that's what it is. Biotech, it did a deeper pullback than I would have liked. I'm gonna wait and make it get over to the 1030 to 1050 area for a move. That may not happen early enough to give me enough time before earnings, so I'll play that by ear. Get a trigger. GLNG, oil and gas midstream. If we get up over this $12 level, I think the target could be up in the $14 to $15 range, and we got a high volume spike here. And let's get this rectangle, and I'll draw that as the target. And what I'm going to do is I'm going to go to a 60-minute chart, and yep, high volume, open. That's, to me, that wants to get retested. Just a matter of time. We may do a little zigzag to get there. We may go on up, get to this level right here, pause or pull back, and then zigzag our way up here. This could be a 2 to 3 week trade. HOLX, Medical Systems. I'm probably going to wait for a breakout. May is the next earnings. I would make it about the 5th of, I don't know whether this was, I don't know why we've been down that day and then immediately reversal. That's an abandoned baby. But, you know, we on Friday looked bullish. Now that I'm too late, I'm going to want to try to either get a pullback into this area and then buy for a move back up, a curl back up, maybe intraday on a 60 or 30-minute chart, and then a move up to 85. Or I wait for the breakout. Those are what I'm going to have to do. Moss is on my list. However, it reports after the close on the 17th. So you probably want to wait, see how it reacts to earnings, and see what it does. And make your plan accordingly. On an area chart, it does have room above. All right, the last one I have on the longs is PUBM, Pubmatic, software application, a new company. Some people don't like to trade in those. I don't have any problems with it as long as the patterns and the volumes. The volume is a little on the lighter side than I would prefer, but not too bad. Be careful. It moves 11% per day. Okay, so anything above this 50 to 75 to $51, looking for a retest of 56 or so. Stochastics RSI curling up from the bottom, and it does have earnings out there far enough that we can have at least a week in the trade. All right, let's go over and look at our shorts. I got more shorts than longs this week. Not surprising. Friday would have been a nice time to enter ABCL to the short side. What we need to do is watch for a potential bounce. So what I'd be looking for potentially is maybe a move there and then a move back up. Get back up to this prior level here and then a move lower. Okay. And I would go short on that curl back down. This could be intraday, it could be a daily chart. But anyway, that move down there, and then I can use a stop that's really tight. So my stop would be the distance between these two. That's money at risk. And obviously I'd see what happens when it gets down to the prior low. And my goal and target would be an area somewhere down in there. ACAD, Acadia Pharmaceuticals. We did a move down to the 200. We bounced a little bit here. We can go either one of two ways on this. We could either go up and go back into this zone and consolidation, and I'll kind of call it resistance and crap. I don't want to get involved to the long side here. What I want to do is I want to be looking to the short side, anything say below 50, and a move to about 48 or so. Now, the stochastics RSI is not screaming out to me that we're going to dive to the short side on this one, but it's something to watch because we are in basically a consolidation box. The part that concerns me is what's the reward. Now, the reward could be all the way down here or in the 40s, but I think we're going to pause somewhere around this 46 and a half at least, and that might give us a better opportunity to get in. Anthem Healthcare. Now, this one is a really nice consolidation and looks a lot better to the short side. Stochastics RSI looking like it wants to roll over. If we go below the 200 and the $287 level, my target would probably be somewhere in this area here, and it can do that in a heartbeat. All right, good volume, good earnings. Earnings dates, or this one, another could be AH, Booz Allen Hamilton. Basically a consolidation here, and looking for it to run to the $75 level. So anything below about 81 and a half or so, down to maybe 75. Clover Health Investments Corp. Again, a little on the lower price side, maybe not the best of short setups, but this little area below 12, I'm looking for a move to 11. That's maybe close to 8 to 9%, not quite 10%. So probably if I have a tier 1, a tier 2, or a tier 3, this might be in a tier 3. DVA, the short was really on Friday. What we really need to do is see what it does here now that we're at the 100-day simple moving average. I believe that we could get a bounce there. And if we do, all bets are off. We could be heading down to the 200 or $90 area. But the first would probably be somewhere the rising 200. But what am I going to be looking for? I'm going to look for a bounce, hopefully up to this $109 to $110 level, then a curl over like we were talking about before, and then I want to go short on the curl and see what it does when I get to prior level and watch these gaps. $100 is some sort of psychological barrier or what, but I think we'll go to wherever this 200 rises to maybe 97 or so. I think that could be it. But technically speaking, the low 90s. Let's look at DXC, DX Technology. We're doing a nice consolidation here. And every time I see a consolidation, I think of a pop out of the box or a poop out of the box. So we could go one of two ways. We could go up, or we could go down. And the reason I'm betting to the downside that it's going to go first is that we're already near the bottom of the box, and stochastic RSI is rolling over. Where are we going to potentially go to? Well, let's mark up the target level. Right here in the mid to low 20s here, 22. GoDaddy. GoDaddy had. I normally don't like to short stocks that are in an uptrend, and the definition really of an uptrend is, you know, higher highs, higher lows. Well, you could also use the volatility stop dots. I usually don't like to short things that have green dots below them, and I don't like to go long with normally with red dots above. However, this one is one of those that might be an exception to the rule, because if we can pause right here for a bit and then go lower, or we do a little bit of a bounce here and then go lower, we could get to the mid 80s or high 70s. The 200, at least the 50 is in play. Watch that we don't get follow through on Tuesday, then the bounce back up to Friday's lowest or so, and then the move lower. And then watch what we do at the 200, rising 200. And we got GoPro. GoPro again, another consolidation, but a consolidation at the lows. One thing that's not in my favor is that stochastic RSI is at the bottom. So that tells me that the likelihood is that we're going to get a bit of a bounce. So if we get a bounce up to about $8 or $9, maybe the 50 period moving average, this could be setting up for a classic blue ice failure. And a blue ice failure, if you don't know, would be where we penetrate the 50, bounce back up to it or a little bit above, and then roll over, and we go down towards the 200 and sink to the bottom of the lake. And that's what I'm looking for. Kennametal, KMT. It did a move down to the 100 period moving average, which happens an awful lot for these blue ice failures. Went back up to the 50, and it is setting up for a possible move down to or towards the 200 period moving average. And stochastic RSI is favoring a continued move, at least down to the prior lows of about 34. Next one is TMUS. I'm going to wait to make it break the 122 and a half, 122 and a quarter level. All of these levels down below, right in here, are in play. Probably looking at the 200, the rising 200. So the target would be somewhere in a 115, 116 level. And the last one, United Health. United Health was on our short list last week, and we got in, and it took profits on the first half, and the second half basically broke even. I'm looking for this to also do kind of a move down to the 200. So I'm going to move the low and the target to here around 320. And stochastic RSI is at the top, ready to roll over to confirm our move. All right, let's go on back to the charts and see what we got here. Again, be sure you check earnings. All right, I want to introduce you to Hit and Run Candlesticks. If you don't know what it is, run by Rick Sadler, one of the best traders that I've run across. Daily market video with trade ideas sent out every morning. You get trade alerts to the phone, and you get trading education with member-only workshops and the e-learning archives. This is what Rick's been able to do since establishing a small account in late August of 2020 with 10 grand. First month It didn't grow all that much, but again, in the markets, it wasn't bad. It was up only about $300, but then really substantial moves here from October through the end of January. When February is, but basically, I'll keep you posted on how it's going. But he's done very well at his Road to Wealth account. Okay, Right Way Options. Memberships includes the morning market video from Doug Campbell. Trade alerts are sent out. You get an options education second to none out there, in my opinion, with the options basics and the member workshops and the e-learning archives. I don't think you can beat it for the price. All right, there is a 30-day trial in either one of these for $49 in hit and run candlesticks or right way options. 30 days, $49. Can't beat it with a stick. All right, the third special I want to point out is the live trading alerts. It's a professional scanning alerting software for the retail trader. It is customizable. You can scan your market or scan your universe. You find the right trade set up at the right time. There is currently going on a 14-day free trial. If you want to find out more about it, you can use the link over here on the left. Or if you want to go ahead and sign up for the 14-day free trial, please use this link. It gives me a little bit of a credit for that. And an attaboy with Ed Carter, who developed this. If you want to find out more about it, you can go on online and find out more every Wednesday. He does a free webinar at 2 p.m. No password required. Log in here. Use this link to log in, and you can ask your questions, and he'll be happy to answer your questions. And he provides tech support during the market hours, Monday through Friday. All right. Finally, if you want to follow along with me, I post things from time to time on StockTwits. I'm not a StockTwits junkie, but I put stuff that's useful, I believe, and not superfluous. YouTube, I have a number of videos that are out there, plus I do these weeklies and any other things in between that I find useful. And if you want to contact me about anything, especially on coaching, you can send me an email to topguntrading2@gmail.com. And if you would please put coaching in the subject somewhere, I will have that pop up on the top of my screen. And I'll get back to you right away. If I don't get back to you within 24 hours, I have not seen your email message. All right. I want to thank everybody for joining me today. And be safe out there and be smart with trading. Aloha.